All right, good morning, everyone. Welcome to the trade findings and adjustments for Thursday, the 12th of December. This should be and will be the last trade findings and adjustments for the year 2019. If you have questions in regards to any trades, this is the one to get done with it, to get all your questions answered. After this point in time, we will be done with following through the trades, and we will not be having more trade comments to have out there. So just giving you guys a heads up. Please do let us know if there's questions in regards to anything that is available for you. Most of this I will most likely be closing down at the end of the year. Again, I'm going to bring it up so you can see everything. I'm going to be closing it down and or shifting it over to a new account so that I can open up a $75,000 account or something like that. All right, here we go. Couple quick questions. Kevin, are you worried about China? Good one. So here we go. To start off, are you worried about China? Yes and no. I keep telling you it's not built in, right? We keep talking about it being built in or not. So no, it's not built in. It's not there. We see the pop today. We haven't seen a big down day when it hasn't been there. It's just not fully built in yet. So great to see the tweets. I'll be honest with you, I don't think anything will get done before tomorrow, so I think we're going to see an extension. I think in good faith, we're going to see an extension for maybe 30 more days on the tariff payments, which means we can run through our Christmas rally. So that comes back to the next question. If you're buying long puts on the SPY, how would you do it? If you're going to protect yourself, right? So if you were buying the SPY long puts, when and where, right? So very good question. I'm going to put this out just for a second. Let me go over this really quickly. I've got my AO vertical call. I've been trying to sell these calls over and over and over again. I was really trying for that 15 cents. I can do a good till canceled preview, and I'll send it yet again. Trying to buy back those short calls. Do take a peek at everything so you see where we're at, what we have. In fact, I might even just do it like this so I can snap a picture of it for you. So that way I can post it and off we go. All right. If I was looking for some portfolio protection, I would most definitely be doing the SPYs. If you looked on Tuesdays, we talked a bit about it. I don't want time decay to kill me. So I would be looking at the January 31st to get through a December pullback. I would probably be looking for something slightly out of the money, a little bit of a buffer. If I was looking for some portfolio protection, I would be doing the January 31 315 long puts for $5.79. That would be a great portfolio protection for China. It's out there in enough time that you can get some profit. It's a little cheap being slightly out of the money. So if I was looking at needing to place some long put or China protection, this is where I'd be putting it at. January 31st, because we're going into the month of options expiration here this Friday. Pretty sure it's this Friday. It might be next Friday. Boy, but I think it's this Friday. Give me a quick second for this to come up. Let's take a quick look. It's actually next Friday. Next Friday, we go into our monthly options expiration. So, the short answer is I would be doing the 31st to get me through a couple weeks past that monthly option expiration. Anytime you're in a long position in the month of options expiration, time decay really starts to eat away at it. So this is the one that I would use, the January 31st. I'd be slightly out of the money because we would expect a pretty big fall, somewhere between 5 to 6% like we saw last year. This would be my portfolio protection. But with that said, could be expensive for you. Could lose a couple dollars if we get a China deal through. So there's a lot of uncertainty, to be honest with you. But it's kind of interesting. Here I'm telling you there's a lot of uncertainty. Yet you can't really point out to me where it's at. The VIX is in the middle range. It's not down at the lows in that 11 to 12. It's not up at the highs at the 20 to 21s. It's right in the middle. More to the low side, obviously, right? But it's right in the middle at 1489, being held down below the 200-day simple moving average on the VIX. You'd think with such a huge announcement, you'd see the VIX plummet, right? Plummet like it did, but watch it pick back up again. Watch it plummet on down from 1549 and boom, plummet right back down again. 1549 is that R2 resistance pivot point. So it's interesting. I'm going to have people that'll critique everything I do. Kevin, there's not a lot of volatility. Well, we had 1 percentage point, up and down over a 7% intraday movement today alone on the VIX. Down, back up. It's just captured technically right now, but there's uncertainty with what's going to happen with the China deal. I would think Trump wouldn't be full of crap, right? I would think Trump would not be full of crap. And wouldn't be lying about what he's looking to do. But we shall see. We shall see, and that's why, again, protection would be right here. So a question came up yesterday. Why aren't you doing more credit trades? So that was the question that came up yesterday. And actually, Ida, did I get your question answered for the SPY protection? Does that make sense to you? And you understand that? So why aren't you doing more credit trades? And it really comes down to, due to this market and the bullish run, I want less risk and more reward. Kevin, what do you mean? Let's take a quick peek and let me show you what I mean. I'm going to go back to AOBC. And let's use where it's at right now, 9.25. So plain and simple, if we were going to do a credit trade, we'd want it to be in the money. We wouldn't go out to a $10 strike price, right? We wouldn't put that short that far in the money for a bull put. So why am I doing what I'm doing? Well, if we take in a 30-cent credit against a 10-cent debit, when we work those numbers, you have a 20-cent credit for $1.50 of risk. 5.5 to 1, right? You can make 20 cents, but technically you could lose actually $1.30 would be your loss. So if you were to place that credit spread slightly in the money, a little bit of protection, gives you 24 cents of a buffer here, you'd get a 20-cent credit. You'd be like, hey, I'm ecstatic, right? I'm ecstatic, off you go, and you're taking 5.5 risks. In fact, let me show you that. If we were to do this on a bull put, add an option, sell it, $9. Limit price is 20 cents. Look at your snapshot analysis. Risk to reward, one risk for a 0.5, it's 5.5 to 1, 5.5 risks for one reward. It just doesn't make sense. For me, I wouldn't be placing these type of trades. They're not going to be helpful. I'll have those in my stuff for you to see. I'll put those in for you later. Thanks for letting me know. So, all right, still trying to erase this. Sorry. So, what am I doing? I'm changing things a little bit differently. If you noticed, I'm doing bull calls. Or I guess I'd be doing a little more out of the money. But I'd rather spend 20 cents And if I had this one again, I'd be spending 20 cents. I'd rather spend 20 cents than get 20 cents, because when you look through the snapshot analysis, 1 risk for 4 rewards. I want to flip that. I don't want 5.5 for risks for 1 reward. I want 4 rewards for 1 risk. Mathematically, more often than not, when you have to put it just slightly in the money or at the money, when you can follow a trend with a bull call position, you flip the risk to reward ratio. I've got 1 risk for 4 rewards. If you remember the other one, it was 1 risk for 0.15 rewards, or basically, for all intents and purposes, the best way to say it is you have 1 reward for 6 risks. You take 6 times the risk for your 1 reward. In this case, we get 4 times the reward for 1 risk. Hence, you have not seen me do a bunch of credit trades. The reason why I don't do a bunch of credit trades is because I want a better risk to reward ratio, and because I'm willing to pay to play for less risk and a better reward than get paid to take on a hell of a lot more risk for a lot less reward. So that is why I am doing bull calls versus bull puts. Now, I hear this all the time, and here's the biggest amateur comment in the world. What do you guys think it's going to be? What would be the biggest amateur comment in the world? World in regards to option trading. I get paid to play, which equals to an experienced trader. I take a hell of a lot of risk for a minimum reward. There you go. Hence, that's why I let the numbers do the speaking for me. And that is why I am doing the bull calls versus the bull puts. It'll be a really good thing to go over this video to work the numbers. The numbers don't lie. All right, are there any other questions? Are there any other questions that I can answer for you guys? If not, I want you to have a great Christmas season. We'll have the trade commentary and adjustments coming up next Monday, and then let's take 2 to 3 weeks off. Let's enjoy our Christmas season. Let's not worry so much about our trading. I might schedule one more commentary just before Christmas, just so we can touch base and make sure there's no worries. Guys, have a wonderful year. I look forward to starting this with you again next year. We'll do it in a more organized format going off of Hurley Academy. You guys have a wonderful Christmas, a wonderful end of the year, and I look forward to seeing you next Monday for the market commentary, the high market commentary, and enjoy the rest of the year, guys. Talk to you later. Bye-bye.